Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Technical Director of AleaSoft and Associate Partner of Alea Green. Alea Green is a new division of AleaSoft recently created that we will present today in more detail. Thank you for joining us today in this webinar with the topic, the macro volatility of energy markets in Europe, benefits of PPA for large and electro-intensive consumers. Once again, our speaker today will be Uriel Salto, Data Analysis and Modeling Director of AleaSoft and Associate Partner of Alea Green as well. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentation. And now, I hope you enjoyed the webinar. Uriel, please share your slides.
Good morning, Alejandro. Thank you very much. Now I hope you can see my slides. So good morning, everybody. Today I all by my own, so I think I will have enough time. I will not run short out of time as it used to happen. I will have a lot of windows open in my computer. We are going to talk about macro volatility, energy markets. We are going to show our online applications. So we will be seeing online data. We will show you short-term reports, mid-term reports, long-term reports. So we have a lot of things to show. So let's begin. First, we'll have a few words about our company and the services that we are offering, in case you don't know us. As always, we will start looking at the oil, gas, CO2 emission right prices. Then we will talk about electricity markets. We'll look a little bit into these macro volatility states that we are seeing right now in energy markets, how we will try to illustrate them, see how we can see them and what we can expect from them. Then we will talk about what are the risks and opportunities that this macro volatility is offering producers and consumers, the paper of PPAs, etc. And then we will look a little bit into the future, how the futures market are forward curves are right now for oil, gas, CO2, power, etc. And then, as always, we will end up talking about what are the key components when the key elements what we are talking about forecasting energy into the future, focusing on spring of this year, that it's expected something to happen there, the rest of 2022 and then 2023, etc. So let's begin. A few words about AleaSoft. AleaSoft offers forecasting services for the energy sector. We are covering most of the European markets. We offer forecasting for demand and price of the energy markets, but also production of renewable energies, other variables that also have impact into the electricity and energy markets, like weather conditions, economic indexes, CO2 and fuel prices, and not only forecasting for the day-ahead markets or the spot markets, but also ancillary services like intraday markets, etc. The methodology that we use for forecasting is our own methodology that we developed in AleaSoft. We call them Alea models. The three main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. So it generates forecasts that keep consistency over time. And what better we can say that it is the methodology that we have been using for more than 22 years. Starting in the IFIR and electricity market and now covering all the energy markets in Europe. Our forecasting reports cover from the short term, so forecasting hours ahead of demand or renewable energy production, or prices for the day ahead markets up to 10 or 19 days ahead. Then the midterm, so we are covering forecasting price and demand for the next up to 3 or 5 years. And then we have the long-term reports, so covering up to 3 decades. So let's take a look now at the evolution of the recent evolution of the fuels and CO2. I always like to start with this historical perspective of the Brent oil prices. Brent oil is the commodity. Oil is the commodity that it can be used as a global index of how the global economy is going. So, and recently we have been seeing very interesting behavior. If you remember, in the last webinar, it was in mid January. So we were at the highest prices that we had since the peak prices that we had in 2018. So we were just there, and prices were going down at that time. So if you remember, I mentioned that we reached the ceiling of this long-term, let's say, downward trend. So we were hitting the point where this long-term downward trend was meeting with this mid-term upward trend. So we were not sure where the price were going at that time. If we focus in the last days, last weeks, we see that we broke, let's say, that ceiling, and right now we are in the highest prices that we have seen since 2014. So right now, what looks clear is that we are having in the midterm, since the lowest prices that we had in 2020, we have a clear upward trend in the midterm, and right now nothing seems to stop the prices from keep going up. So and probably the next level that we are going to reach at some point are the prices that we had since 2010 and 2014 that were above $100 per barrel. So probably at some point we will be reaching in the near future this $100 level. About the gas prices, right now we are kind of in a stable state. Prices that are really high. So we used to have before this crisis, before 2020 also, we used to have prices around 20 euros per megawatt hour. Right now we are kind of stable, but around prices around 95, 80 euros megawatt hour. So really high prices, but in the last weeks we have seen some stability. Taking into account that we are at, as I said, very high levels, and that prices are fluctuating. At this scale, it may look a little fluctuation, but we are talking 20 euros up or 20 euros down. That it's kind of the range that we had at the level, the prices, the nominal prices that we having some years ago. So right now, this is the usual fluctuation that we can see in just a couple of days. So this, as we will see, this is one of the key components of this macro volatility that we are seeing right now. So kind of stable, but at very high levels. As you know, these gas prices are very sensible to geopolitical situations right now, with the main supplier in Europe, that is Russia. So all these geopolitical conflicts can have or are having a great impact into gas prices. So when it started just with kind of a stress in the supply, so we were not sure if we were in Europe we would having enough gas to supply during the winter. So right now it is clearly a political conflict. So gas supply, it looks like it is assured for the rest of the winter, but right now are these geopolitical tensions the ones that are driving these fluctuations in gas prices. And the CO2 prices, so obviously we have been seeing prices rising since 2020. And right now, in the last days, we have seen new historical heights, getting closer and closer to the 100 euros per ton. This kind of psychological level of the 100 euros. We are getting closer for sure. We will be hitting this level soon. But also CO2 prices are kind of a little bit driven by gas prices also. So probably we will have some weeks of stability around these prices, but it's difficult to say. As we know, this CO2 market is a market designed for being a key for the energy transition. So it's a market designed to have prices that are always rising. So, and this is what prices are doing, probably at a higher rate that we would like, but for sure prices will keep going up, and we will soon see this 100 euros level. So going now to the electricity markets, obviously I will not have time to go through all the European electricity markets, but I will take this opportunity to show you our online tool, what we call AleaApp. It's our online platform. And there you have all the data that you need and more to analyze and to follow the evolution of energy markets in Europe. So all the data is grouped in what we call observatories. In each observatory, we have a group of variables that can be seen and analyzed together. For instance, in the Spanish electricity market, as you can see, we have Spanish price, demand, wind production, solar production, etc., hydro, all the productions, the interconnection with France and Portugal. This, what we are seeing here is the hourly price of the last days. You can have you have all the histories of the variable. So since 1998, when the market started, but we are not going to show it right now. But we can, for instance, see how the prices have been doing since the beginning of the year. And as we will see, we are having prices above 200 euros per megawatt hour. These are very high prices. We are kind of getting used to these level prices, but just looking at few months ago, these prices are really high. So and also you can see the demand in hourly. You can group it by weeks, month, etc. I'm showing now months, so I must go back, for instance, in January 1st of 2021. So this is here. You can see how we had a very high electricity demand during January 2021. This is due to the Filomena storm that we had during the last year, the previous January. So well, a lot of information, and you have a full history of you can even put some filters like showing moving averages, showing, for instance, also comparing weeks and comparing months. But also you have the option to plot together different variables. For instance, we can show, for instance, what we can see in Spain. Interesting things in Spain, for instance, is see how the wind energy or how the backup of the wind energy are the gas combined cycles. Let me find it. Okay, here we have. We can plot wind energy production and gas production. And it's interesting to see how this, when there is low wind energy production, we are having a lot of gas production. So interesting to see how for instance, this is a simple analysis showing how the gas is the backup right now of the wind energy. Also, we can try to correlate, for instance, let's say demand and temperature. That's a classic one. Demand and temperature. Here. You can put it in different axes, so they can So you can here demand and temperature. So for instance, this is okay. Then I'll put it in month. And we can, for instance, see, as I said, how during the last January 21, we had very low temperatures and very high demand. And how temperatures are higher during the winter, during the summer, and also in this southern, the countries in the south of the continent, we are all having peak electricity demands when the temperatures are very high. So we have peak electricity demands when temperatures are very cold or when they are very hot, something that's a little bit different than in northern countries. So, okay, what else we can see? It's also interesting to see, for instance, the prices in the British market. This market has it's one of the characteristics of this market is that it usually have very high peak prices that can go up to 1,200 pounds per megawatt hour, and we can see how during 2021 we had a lot of these high high peaks reaching 2,500 pounds per megawatt hour. And we have all the electricity markets, and then we also have the fuels market. So here we have gas prices, oil prices, coal prices, CO2 emission rights, as I said. And for instance, let's say interesting things that we can see here. Okay, well, we can see what we have just seen, how the upwards rally that gas prices are having right now. So this is just the plot that I've just shown you a couple of minutes ago. So okay, for interesting things here, we can compare the European reference prices for gas that are the Dutch TTF with the Spanish gas prices in the MIP gas hub. And for instance, let's say we can compare these two variables. And for instance, let's see how they are usually the same prices that are usually very close, but at some point it's interesting to see how they can differ. For instance, let's go back to January 2021, as I mentioned, during the Filomena storm. And you can see how there, during that storm and the increase in gas demand in Spain, prices in Spain were much higher than they were in the rest of the Europe. But for the, let's say, usual temperature, usual situation, prices are very quite similar. What else? We also have futures prices. So here we have these are the yearly futures, electricity futures. So we have Spain and France here. For instance, we can compare this. Here we are comparing Cal 23 for Spain and different markets in Spain. We have OMIP, EEX, and MEF power compared to France, and we can see how right now Cal 23 for Spain is around 127, 128, and for France we are above, close to 160. So large differences, and we can go back a little bit, see how historically these prices has been. Go back to 2020, where the situation was quite different. So at that point, prices were more or less the same, but as times passed, the futures for France are getting much higher above the Spanish ones. More interesting things, we also have macroeconomic data. So GDP for France, for all the countries, industrial production indexes, etc., exchange rates, a lot of this macroeconomic data. And then you have the possibility to build your own observatory. So group you can group the variables that you are interested in order that you can analyze them individually. For instance, I have this observatory, called EU prices, where I have all the prices for the markets that I usually follow. So just clicking a multigraph, I can compare them, all of them at once in daily. And you can see this is something that we will see afterwards in a slide, but you can see how we have prices for in the top we have prices for Italy and for UK, and then the lowest prices are usually Belgium and Germany. And then I have another observatory, I called it ES price analysis, where I have the price for the Spanish market, and then gas prices, CO2 prices, demand for Spain and wind energy for Spain. Something interesting. Well, I have these variables because are the ones that I usually look at in order to analyze the behavior of prices. And for instance, we can analyze, for instance, what happened during December 2021. Let me go back a little bit. Oops, sorry, December 2021, because it was an interesting month when you can see that we had this peak in prices. So this was when we had that peak in gas prices. So probably this can be correlated. If I plot here the gas prices, this can be correlated with gas prices. Let me see if that's true. And we can clearly see how the gas prices are the main, or one of the main drives of the prices in electricity prices in Spain. But we are seeing these peaks here, or this situation where we were having very low prices, even we had high gas prices. So probably I will let me see, also plot wind energy and wind energy and demand for Spain, and we'll see something interesting. Like, oops, let me put it in different axes. Here we go. So interesting to see, as we expected during that week in Spain, we had 2 holidays, so it was a week with very low demand, and matching these peaks in wind energy production, it's when we had the very low prices in Spain. But this is also interesting to see how this incredible increase in the electricity market prices was not only correlated with gas prices that we have seen, but also with very, very low wind energy production. So it was kind of the perfect storm, where we were combining high demand, because we usually have high demand during December, high demand with high electricity prices and very low wind energy production. So well, this is just one of the analysis that you can do with all this available data that we have in our online platform. In order not to get to run out of time, I will go back to my slides. Okay, just to show how important it is to have information in order to not only to understand how the energy markets are evolving, but to understand why they are doing in such a way. We also have just here to have a list of some of the analysis reports that we are having, analyzing and modelizing the energy sector in Spain, covering any aspect that can have an influence. So just go to our website, and we have a lot of available reports. So going back to electricity market prices, this is the evolution of electricity market prices, the monthly average since 2020. So in March, April, we had the lowest prices during the worst part of the pandemic. And then prices started this this bullish rally, and then first in October then November, and then December, we had the highest prices in all the electricity markets in Europe. January prices went down a little bit, but still we are around above or around 2,000 euros per megawatt hour in all the electricity markets. This is nearly 5, 6, 7 times the usual prices that we used to have before 2020. So really high prices. These are the prices, something that we have just seen in the online platform. How are the prices during the last days? This is just from the beginning of 2022. So as the usual situation, UK prices are the one that are the highest ones. Then we have Italy also with very high prices. Spain is somehow into the middle. The lowest prices are from the German market, and kind of an unusual situation are the prices in France right now, where we are at the level, they are at the level of the Italian prices, something that it's not the usual situation. France are usually lower than Spain and close to Germany, but right now France is having their issues with nuclear production, so they are registering higher prices than usual. Now let's take a look a little bit into this macro volatility that we'll always talk about. That we will try to illustrate, identify how we can see that we are in a state of macro volatility and what are the implications. So macro volatility, it just means a lot of volatility. So it's kind of a relative term because it's a lot of volatility compared to what we were expect, the volatility that we were used in the energy markets. So here we are comparing, these are the hourly price distribution. So for the last 4 years from 2018 to 2021. And for the Spanish market, I will focus in the Spanish market, but the situation is basically the same in all the European markets. So what we can see is, let's say, the last normal, if we have any normal year, last normal years in the electricity markets were 2018 and 2019. And we can see that in that years, 2018 was a year with prices, relatively high prices at that time. So we see that most of the prices were around 60, 70 euros megawatt hour, but then we basically have no prices above 90 euros per megawatt hour. And then we have a tail, and we had some very low prices. 2019 prices were going down at that time, so most of the prices were around 40, 50 euros megawatt hour, but we had prices up to 80, 85 euros megawatt hour. So this is more or less the situation that we have been having for the last years. Then 2020 came. 2020, we know it's been a very special date. So we were having much lower prices. Again, prices focused around or concentrated most of the time around 20, 50. So it kind of, this distribution kind of went a little bit wider. So we can say that we had a little more volatility during 2020 than during the past years, but prices went down rapidly around 60, 70 euros per megawatt hour. Now 2021, we can see that the situation is completely different. So obviously we had very much higher prices in 2021. Most of the prices were close to 100 euros per megawatt hour. That's nearly twice the average prices that we were having. But we see how we had hourly prices that went up to more than 400 euros per megawatt hour. And at the same time, on the other hand, we were having more prices close to zero than 2020. That was the year with the lowest prices that we have seen until now. So this is a clear picture of macro volatility, something that changes from the usual prices that we were having right now even an extraordinary year like it was 2020, looking at this chart, we can say that it was kind of a normal year in terms of volatility. And then we had 2021, completely different, no reference, no way to compare them with the past years. So prices went up to 4 times the highest price that we had ever had, and then having more prices even at lowest prices that we were having at that time. So a completely the situation changed completely in no predictable way. Focusing now just in 2021, looking at the different quarters, we can see how in the first quarter we had a wide range of prices going from zero. We had, because in February, the Spanish market had the lowest prices in all Europe, something that's not usual the situation, but at that time, sorry, we were having the lowest prices. So we see a lot of low prices at a lot of hours in these lowest prices, and then prices that during the Filomena storm went up to 120 euros per megawatt hour. Then the second quarter, let's say it's the most normal quarter that we had in 2021, with prices a little bit high, 70, 80, some prices very low, but no prices above 100 euros megawatt hour. And then the third and the fourth quarter are the ones that kind of just change completely the situation. So in the fourth quarter are the one that we had the prices above 400 euros megawatt hour during December, just before the Christmas Eve. And you can see most of the prices for the fourth quarter were around 200 euros megawatt hour. That are the level of prices that we are having right now, more or less. Another way to illustrate the macro volatility, because macro volatility, as we have seen, can be defined that how wide is the price distribution in a given quarter, in a given year. But this range of prices can be so the change in prices can be kind of slow, kind of smooth. So it's maybe another way to see how the volatility, let's say, impacts on prices is to plot the price variation. So looking at the difference between the price in 1 hour and versus the price in the previous hour. So how much the price can change from 1 hour to the next one. And we can see how in 2018, 2019, even 2020, that was kind of a different year, different year. Most of the prices from 1 hour to the next one changes around 2, 3, 4, 5, 6 euros. That's the usual change. Most of the prices change within that range. So in this year and in these 3 years until 2020, 99% of the variation from 1 hour to the next were below 10 euros megawatt hour. So just 1% of the hours had a price change from the previous hour of more than 10 euros megawatt hour. But in 2021, you can see how the situation again changes completely. Now, although most of the price changes are within that range, the tail is much higher. So in order to contain the 99% of the variation, we have to go up to 38 euros megawatt hour, meaning that variations around 20, 25, 30 euros megawatt hour were quite common during 2021, meaning you can imagine how the graph of the hourly prices can fluctuate if we are having such big changes from 1 hour to the next one. And looking at 2021, the four quarters, you can see that during the first 3 quarters, the situation was quite was quite similar, although we had some price changes up with more than 10 euros megawatt hour. The situation was more or less what we have seen in previous years, but it was in the fourth quarter where everything changed. You can see how we had a lot of price changes above 30 euros megawatt hour, and the largest price variation in 2021, more than 100 euros megawatt hour, meaning from 1 hour to the next one, the price changed with for more than 100 euros. That's well, if something is the definition of volatility, I think is this one. A huge price change just within an hour. And well, macro volatility offers some opportunities, but also poses a lot of risk, both for producers and for consumers. And the goal of every consumer and any producer is to protect against these situations or the situations that macro volatility brings us, and protect the ones that are unfavorable for us, and trying to take advantages of the ones that are good for us. So in general, a good advice, a good strategy, it's diversification. We usually show this kind of diagram with the most simple trading strategy in order to buy or to sell electricity. So it's just dividing the energy and putting it into different horizons, trying to close step by step, closing positions, closing contracts in order to get to fixing prices and always trying to get the best deal at every horizon. So at the long term, part of the energy can be, well, if you are a consumer, you can always try to you can explore the option to build a self-consumption or self-supply installation. In that way, just when you just having the capex and the capital and the operation expenses, when you have recovered all your inversion, basically your the energy is free for you. Then at the long term, the interesting is to close PPAs, the largest the possible. More than 20 years is difficult to have a PPA, but you can also have bilateral contracts or even futures for the next year, for the next 2 years, then at the midterm, next quarter, next month, and then at the short term, you have weekly products in the future market, and also at the last resort, you always have the day ahead market. It's a little bit risky, but having some energy in the spot market can then we can have the option to take advantage of very low prices if you are consuming energy, or very high prices if you are selling energy. Obviously, the volume of energy that you're going to allocate at every horizon depends on your strategy, on your aversion to or your risk appetite. So long-term options are always more stable in terms of price. Usually it's a more conservative approach in terms that it's less risk, but it's not always the best price. On the other hand, in the short term, you have more fluctuations, but it's usually where you will have the best or the most competitive options in terms of price. And in order to plan, in order to execute these strategies, what you need are a vision of the future of the electricity market at the long term, at the midterm, and at the short term. And In AleaSoft, we have short-term reports, mid-term reports, and as I mentioned, long-term reports. I'll show you a couple of examples of these reports in case you are interested. Short-term reports are the reports that we are where we are having price forecasting, usually up to 10 days. In some cases, we can have up to 18 days. And then we have forecasting for match demand of the electricity, demand, renewable energies, temperatures, depending on the market. We have different different interesting variables showed. These are the forecasting reports. Then we have market result reports when we basically are comparing the forecast that we did with the price results and the matched demand results of the market. And usually for most of the market, we also have second forecasting report. So after the market results, we are already sending a forecasting report for the D+2. So once the day ahead market passed, we are already forecasting the D+2. And I'll show you now. Let me see an example of these short-term reports. So this is an example of a short-term report for the Spanish market. So as I mentioned, forecasting for the electricity market price 10 days ahead. You have the graph, you have the table. You have the table at hand just here with the day ahead, the forecasting of the day ahead. At the end of the report, you have all the table with all the data that's in the graph. So you have all the data for the 10-day forecast. This is the same forecast, that just with peak and base and based data. Also a table with the data. This is a comparison of the real prices compared to the prices of the previous week, something that our clients find interesting, so we included it in the reports. Then you have forecasting of wind production, also 10 days ahead. Solar production in Spain. In Spain, solar production is photovoltaic and also solar thermoelectric, so both are combined here. Match demand for the electricity market, then demand of the electricity system, and daily temperatures. And then, as I mentioned, you have the tables with all the data for the 10 days horizon. So all the data that you see in the graphs are also in the table format at the end of the report. So these Excel reports are interesting because are let's say human readable. You can look at the graph, you can take the data and copy it to your Excel, or even do some calculations right here. It's also easily readable by scripts, so you can program to read the Excel. We can also offer these reports just in text data or XML data in order just to be machine readable. So we are kind of flexible in the format, but this is usually what we are having. The different markets have different variables, but this is the general idea of the of how a forecasting report looks like. And then we have the midterm reports. We have two kinds of midterm reports. We have the mean forecasting reports, where we have the monthly average price 36 months ahead using the mean scenario, and then the monthly average for all the explanatory variables, and also the hourly price. So we are not only showing the monthly average for the price, but the hourly forecast 3 years ahead. So it's hour per hour for the next 3 years, you will have a price forecast. And then we have the stochasticity reports. What instead of showing the average price forecast, we are showing the probability distribution. So what's the probability for the next month, next quarter, next year? What's the probability of having an average price at a given price? So I'll show you right now an example so you can understand what I mean. So first of all, the mean forecasting report. This is how it looks like. In this case, is for the Spanish market. I chose a report from mid 2018. So I can show you the full horizon of 36 months. So at that time, prices were rising. Remember, in 2018, we had big prices, so the highest prices since the last highest prices that we are having right now. So our forecasts were saying that basically that prices would rise a little bit, and then they will start going down. That's exactly what happened. Prices keep going up a little bit higher than what we expected, but then they started decreasing. Well, and then 2020 started and prices went down even more. For gas prices, we're forecasting more or less the same evolution. That's more or less what happened. Prices went up a little bit higher than what we expected, and then they started going down. Well, and then 2020 they went down even more. Brent prices, we were forecasting prices start going down immediately. That's exactly what happened. Then in 2020, prices went a little bit down, but by 2021, prices recovered the expected level. CO2 prices, we were forecasting prices going up. They went up at a higher rate than when we expected. But then coal prices, exchange rates. So, and then we have the variables for the market. In this case, the Spanish market: hydro production, wind production, nuclear production, solar, demand, etc. In Spain, we have this special regime. In Spain, we used to have this special regime with all renewables and small technologies. Small installations were grouped. It no longer exists, but our clients find it interesting, so we are also including it. So the special regime without the wind and the solar production. And this is the visual part of the report, but then you have all the data that is shown in the graph. You have all the data also in tables. And as I mentioned, you also have the hourly price forecast. So for the next 3 years, you have the forecast for every hour going down to 2021 in this case. So this is how our average report. So again, in Excel, so you can copy it, read it, make your own calculations here. So very useful. And then we have the stochasticity report. Let me see. Okay, I need to. Okay. Here is. In this case, it is a PDF report because basically the data here it's kind of difficult to. So the best way to interpret this is looking at the graph and looking at the tables. So what does these distributions mean? So what we are showing here is instead of just the average forecast or the average price forecast, so that we were showing in the other report. So the other report we had a scenario and that we've made a forecast with it. In this case, we are having simulation. So we are kind of simulating all the possible outcomes of every variable and then making price simulations on that. And then we plot the results of these simulations and build these distributions, meaning that for every month, in this case, July 2018, we are predicting that the average price for July would have this distribution probability, meaning that probably the most probable price will be around 61.5. But then you have some probability, but less, that price being 64 or that price being 56. So, and then this distribution is built using this number, the numbers in the table. In this table, you have the percentiles, meaning that, for instance, you can see how for there is a 95% probability of the average price in July being below 64%, or there is a 99% probability of the price in July being below 68%. So you are not only having alternative scenarios. Let's say in case the price is very low, gas price is very low, gas price very high, you have a lot of wind, you have less wind. Sorry. You are not only having alternative scenarios, but you are having the probability associated with each of these scenarios. So this is just the input that you need in your risk model, in your risk management model. So if you are comfortable with, let's say, a risk of 90%, so then you can assume this price. If you need an assurance of 95%, then you take the other price. So you are not just having an alternative scenario, you are having an alternative scenario and the exact probability associated with that scenario. So that's very useful because it's a quantitative forecast, a quantitative probability. So it's kind of a scientific value associated to your forecast, and you have this. This distribution for the coming month, the coming quarters, and the next 2 years. And then you also can see these vertical bars. These are the prices for these products in the futures market. So in the case of Spain, we have the OMIP market and the MEF power market. And in that case, the first quarter of 2020 was trading at 53 and 41, and you can see these values in the plot with the distribution, so you can kind of analyze if the future is overpriced, is underpriced, what's the risk that I am assuming if I am buying right now Q1 at 56. So this is very, very useful information and quantitative information, not just a number, but a lot of numbers, every number with its own probability. So let me go back to my slides because we are reaching the end. So, and going to the long term, what we talked about the PPAs. One of the topics of this webinar was the PPA. Why the PPA is interesting? Well, it's interesting for both sides, for the producer and for the consumer. It may look like a PPA has always a winning part and a losing part, because if the PPA has lower prices than the market prices, then the consumer part is winning, but the producer part is losing. But that's not the idea of a PPA. PPA has to be understood as a tool for price risk management. Sorry. So it has to be understood as a win-win situation. So even if you are a producer, even if you are a consumer, if you sign a PPA and you have a fixed price, then you can forget about the price market, about fluctuations, about macro volatility, because you have price and you have completely mitigated the risk associated with the fluctuation in the energy prices. So in the case of a producer, you have a fixed price, you have a predictable income. You can calculate the return on your investment because you know what's the revenue that we are going to have for selling the energy. So you can then go to a bank, go to an investment fund, and show them what will be your ability to return the money. And if you are a consumer, then you can predict your energy cost. You can then plan for investments because you have the certainty of what the energy cost will be in your side. So it's not trying to beat the market, not trying to win over the other side. It's just finding the price that it's comfortable for both prices, and then both prices win because both of them have predictable incomes or predictable costs. And in order to find what's this best price for a PPA, we have our long-term forecasting reports. our forecast long-term reports have there are two parts. We have a PDF report where we describe the market, what's the situation of the market, what's expected, what are the plans for developing renewable energies, what are the input conditions, the assumptions that we have made in order to make our predictions. We explain the results, we explain our methodology, etc. The content of the PDF report depends on the market, because for some markets it's interesting one aspect or the other. And then you have an Excel file with all the data, with all the numerical results of like renewable energy forecast, nuclear. So the forecast for all the technologies, the demand, and then you have the price forecasting. You can either have hourly price forecast, so the forecast for the price for each hour for the next 30 years, or you can have a mean profile for every year. It depends on the case. And then you have confidence band also as kind of the distribution that we were seeing in the midterm report. So you have a confidence band that is giving you not only alternative scenario, alternative prices, but the alternative prices associated with a given probability. And then prices also captured by technologies like the solar photovoltaics or wind energy, all the renewable energies that are non-dispatchable. So it's important to see what's the price that they capture. And in order for this in order to take advantage of this macro volatility, and something that will be very important in the coming energy transition, is the hybridization of technologies, hybridization of renewable technologies, and also with energy storage. So in order to make as renewable technologies are kind of complementary. So we have solar during the day, we have more wind usually during the afternoon or during the night. We have more solar energy during the summer, and we have more wind energy during the winter. So they are kind of complementary. So having hybridization of these two technologies it's very interesting in order to have flexibility, and stability to the grid. But if you add storage, then you can add this extra flexibility that optimizing how you charge and how you discharge the battery, how you sell energy directly to the market or store it for sell it later. Optimizing all these at the long term, we can do that at the long term. It's the way of maximizing the revenue that you obtain for selling the energy. And okay, now I'm running out of time. So we will look a little bit now into the future. This is the forward curve for the Brent oil prices. So compare that with what we saw in our last webinar in mid or 11th of January. So as Brent oil prices are going higher, also the forward curve is going higher right now at the long term, just above $70 per barrel. In the future, in the gas forward curve in the futures market right now, what we in the last webinar we saw how the prices for 2022 raised a lot. So now they are raising again, following the spot prices. So the big change that we were expecting, so when we in December, in November last year, we were talking about prices will go down in the spring of 2022. Right now, we will see something in the spring. Some prices are expected to go a little bit down, but they are much less than what we expected. Now the large decrease in prices, in the gas prices, are expected for the spring, but 2023. So these prices going down is getting pushed forward. And then at the long term, no changes, prices around 20 euros megawatt hour. CO2 prices are reaching new heights. The forward curve is getting higher and higher. As I mentioned, probably sooner than 2024, we are going to see prices above 100 euros per ton. And the forward curves in the electricity markets right now for the electricity, Italy, France, and Germany prices between around 150 euros megawatt hour. At the long term, prices above 90 euros megawatt hour. That's a lot. That's a lot for a whole year at the long term. And then Spanish, usually, as it's usually the case, prices much lower. As we always mention, the forward curves in the futures market are not a good indicator of future spot prices. It's not a good forecast for the spot prices, but it's kind of an indication that what the traders are seeing right now, and they are seeing right now prices much lower in Spain than in the rest of the of the markets. And just reaching the end, just a summary of sorry, what we have seen. Gas prices stable, but at very high prices, CO2 prices going and reaching higher and higher prices. So electricity market prices right now at very high prices, around 200 euros megawatt hour, a situation that may seem now stable, but its prices are a lot, they are very, very high. So as I mentioned, the large decrease in prices right now is pushed to spring 2023, while at the long term, what we are seeing is basically a stable situation once this episode of high prices goes away. Basically, we expect to return to the expected levels at the long term. And as Alejandro mentioned, we are introducing Alea Green. That's a new division in AleaSoft that will be in charge of all the long-term analysis, long-term forecasting of the of AleaSoft. And it will be basically trying to push or trying to help the energy sector, developing renewables, developing strategies for investment, for financing in the renewables projects. And let me finish right now. I'm clearly out of time. Just let me invite you to our next webinar. It will be next month in March 17th. And then it will be, we will be with speakers from Ernst & Young. We will be talking about regulation, financing of energy projects. As always, we will be looking at the energy markets. And for sure, it will be. We will be talking also about PPAs. PPAs is always an important topic in the energy sector, and it will be very interesting. And Alejandro, sorry because I am very out of time.
Don't worry, Oriol, and thank you very much for that great presentation. And we will start now the Q&A section of the webinar, but since we are already out of time, we will answer only a couple of questions. So I will answer the first couple of questions that we already have available. How can I access the platform that AleaSoft offers? Well, we are offering a free trial period of this Alea app platform for clients of AleaSoft or companies that are interested in collaborating with us during the months of February and March. So it's available to request this trial. And I have another question. Are data for the Greece electricity markets available? Well, we have all the data for these markets, and the forecasting services are already developed and available for this market. And since we are including new markets in the Alea app platforms at all times, the data for Greece should be available soon. So you can request an offer for this service. Uriel, do you have any questions that you want to answer?
Just a fast, last, very easy question. In Spain, is there in Spain, is there any mechanism or regulation in place to avoid negative prices? So no, not right now. Just in 2021, the prices, the price cap and floor in Spain were €0 and 180 euros. But in order to in order to go in the same direction of the rest of the European electricity markets. Now the price ranges changed. Now it's minus 500 up to 3,000, I think. So no, right now we never had negative prices in Spain, and right now there's no limit to have negative prices.
Okay, perfect. So we will answer the remaining questions directly by email. And thank you again, Uriel, for your presentations and the audience for joining. Have a nice day.